Most traders don't lose because their analysis is wrong. They lose क्योंकि उनकी entries late हो जाती है, emotional होता है या तो random होता है. They see the move, they hesitate and then they try to chase it. फिर उनको trading stressful लगती है. Stop losses बड़े हो जाते हैं, target छोटा हो जाता है and nothing feels clean. In this video, I'm going to show you the missing piece, the part most traders never truly understand. कोई pattern नहीं, कोई indicator नहीं, कोई shortcut नहीं. But the logic behind why that price moves and how that creates high probability opportunities for us. Welcome to Chartistics. This channel is about pure price behavior, structure and logic, just how price actually moves. If you are serious about understanding the market at a deeper level, you are in the right place. हम सब जानते हैं कि सप्लाई एंड डिमांड क्या है. हमें जोन्स ड्रॉ करना आता है, levels draw करना आता है, but very few people know how to use it to find high probability opportunities. That is the gap, that is the missing piece. And today we will break that down using two real examples. Each one will show you how the structure decides direction, how impulse validates zones, how imbalance creates opportunities, and the most important one, why the origin of the move matters more than the move itself. Alright, before we dive down deep, let me tell you how I trade personally, what I would like to see on a chart before I enter in a trade. So what I like to see is a structure, then impulse. Impulse tells me the intent, whether bullish, bearish, and then I wait for a pullback for my continuation entry. As I said, for me, structure is very important because I know that you can be fooled by impulse and intent, but structure is always honest with you. Strong candles can lie, structure does not. Okay, so before we go into charts and look into some real examples, let's understand some basics. First, demand is a price area where strong institutional buying caused price to leave aggressively to the upside. It's not where the price stopped, it's where the price has left the area aggressively. And supply is a price area where strong institutional selling caused price to leave aggressively to the downside. So look in the two pictures that I have attached. This is how it would look like in your charts when you're trying to identify supply and demand. Strong bodied candle leaving a mini consolidation area aggressively, either upside or downside. Next step in our process is to identify the supply and demand zone. My technique is to use the last opposing candle before the price break away aggressively from the mini consolidation area. So look at both the examples that I have shared here. On your left, you will see how I marked the demand zone using the last opposing candle for my long entry. And on the right side, you will see how I marked my supply zone using the last opposing candle for our short entries. Remember, we are not going to chase price after the bearish or bullish displacement. We will always wait for a retest. That's why I put here in red, first move creates excitement. Our execution would be in the second move, which is retest. So retest creates those opportunities. You will see these two images showing you that the market is retesting our demand zone in the left picture and market retesting our supply zone in the right side picture. Retest into a demand zone offers discounted price for buyers and retest into a supply zone offers premium to sellers. Now many people make mistake here. As soon as market enters the retest zone, they go ahead and execute their trade. But this is a very wrong approach. There are three types of entries that can be used when the market is retesting our zone. And that is what we are going to discuss in our examples and how I trade. This image is just to show you how the market moved once it retested our zone. So you see here that market has moved in our favor, which is a win for us. And same here for our supply example. So you can see how the market has rewarded us for our patience and waiting for retest. If I were to tell you about our execution once the market retests our zone, this is how it would be. First, we know that we never enter in the first move. Definitely we see the bullish intent, but this is not a confirmation. We wait for a retest. If this bullish intent was real, market will always come back, retest zone and respect our level. So, first technique is your aggressive entry. Aggressive entry is when you enter right away as soon as the market dips into your demand zone. Second would be to identify a bullish candle showing that the buyers are really stepping in and then waiting for a small pullback. and then you enter at the third candle closing. That would be your balanced approach. The third entry would be a conservative approach, where we wait for a market structure shift. So we wait for our higher low to break, and then after this mini consolidation, we enter at the closing of the bullish candle, which shows a bullish displacement. So these are our three styles of entry, which we will discuss in detail in our examples. So this image is just an example of how the market moved once it retested our zone and the kind of reward that market gives us for waiting for retest. Key things that I would like to share with you guys. Most retail traders, they blow their account on first touch. Now think how many times you have done that. Also think, would the scenario be different if we waited for a retest? Give it a thought. And if you are struggling with that, this video will definitely help you. If you are struggling with FOMO in the first move, you are not alone. Many traders, they go through that. I also used to go through that. But one thing that helped me a lot is a saying by Jesse Livermore. He says that we do not buy strength or weakness. We want to buy strength that survives its pullback. So, strong moves don't scare me anymore, but it excites me. Why? Because I know a retest is coming. So having all that said, remember, price gives you two opportunities, one for emotions and second one for discipline. So first important thing is to identify the market structure. Is the market forming higher high, higher low, or is the market forming lower high, lower low? Let's say, for example, if we identify that the market is forming a higher low, higher high structure, we see there is a break of structure. Then we immediately don't go ahead and buy our first move. If this move was real, if this move was strong, market will always come back, rebalance, and then we will wait for an entry at this retest after the pullback for an entry long. And same would be the case when we are trying to identify structure for the supply side. So now let's look into one more example. Okay, so let's look into an example. Before we draw zones, mark levels, it is imperative we try to understand the intent. Let's try to understand the structure. Let's try to find out what is happening with the price. Is the price struggling? Is the price expanding? Let's make a sense out of it. Let's pause for a moment here and think what the price is doing here, what the structure is looking like. What I see is the price is forming lower lows, lower highs. So we mark our structural lower high, which is important for us. If the price were to go high from here, the price would have to break our structural lower high, show acceptance there, and then we wait for a small pullback for our long entry. Anything under the structural low would be a sell opportunity for me. This is when marketers say sell the highs. Okay, so now we see some strong blue candles, which shows bullish intent. But is it real? So let's pause for a moment here and think, would you buy from here? Or what would you do? Remember how I said in the beginning, candles can lie, but structure, they never lie. So structure will always be honest with you. So always stick to structure. Okay, so now we see that the market has respected our lower high region and continued downwards. Now you can see that our previous lower low has now shifted, that those blue candles which showed bullish intent in the beginning has formed the new lower low. So this clearly shows that this bullish intent was not real, and we see that the market has respected our lower high. So this zone is just a bearish pullback forming a lower high. So this big blue candles only created because of liquidity driven retracement for a new lower low. We could say it's a bearish pullback which formed our lower high for a new lower low. This is a psychological trap. We will never enter in our first move. We will always wait for retest. Having understood the lower low price structure and market printing a fresh lower low, this confirms the bearish intent. With that bias in place, our next step is to mark our supply zone. Here we can see a brief pause, or we can also say a small consolidation area, followed by this big bearish displacement candle. This big bodied strong bearish candle tells us that aggressive selling has entered the market. So this consolidation area becomes the origin of bearish displacement. From there, we go ahead and mark our supply zone using the last opposing candle inside that consolidation area. Looks like I have marked the wrong candle. Let me go ahead and fix it in the chart. And remember, we don't chase price after this displacement. We let the price come back to where the selling originated. Now we simply wait for the price to retest back into our supply zone for short entries. Okay, so here we are in the replay mode and I have fixed our last opposing candle. And I see that the market is retesting our supply zone. This is where patience really matters. I'm not interested in selling here only because market has entered our supply zone. This is where many traders make a mistake. I want to see that the sellers are really defending this area. Let's break down step by step how we would execute from here. We see a big bearish candle. Now pause for a moment and think, would you enter here? I wouldn't enter here right away. Why? Because this type of candle is an invitation to early sellers, so market can trap them. I would like to see a small pullback around 50% of our first bearish candle and then enter at the closing of this candle. Let's see next what happened. Instead of pulling back, the market pushed higher. This should not change our bias. Just because market has broken above our supply zone, does that mean we are going to buy from here right away? That would be a whole new analysis. This move could be just a trap to shake out those early sellers. My bias is still bearish. I would like to see sellers are stepping in. So this strong-bodied bearish candle tells me that the sellers are stepping in, but it is not a confirmation yet. Now we see a brief pause or a mini consolidation area. This zone is our indecision zone. Great, so this strong-bodied candle is our bearish displacement. This tells me that the sellers have aggressively stepped in, and this is our entry candle. Now let's see how the market moved from here. Great, so market is going in our favor. Okay, all right. That's great. So market has moved in our favor. It's a win for us. And my stop loss is at this swing high. This is definitely a high reward trade for us. And if we were to talk about invalidation, it would be if the market prints candles above our supply zone and shows acceptance. Now let's talk about the different types of entries that can be made from this zone. First, aggressive entry would be selling as soon as it enters our zone. For a conservative trade, we would wait for this higher low to break and then we would enter after this consolidation. So please write me in the comment section what is your entry style. And I'm not sure if I have mentioned, so this chart is from November 03. Alright, so now we have understood the basics and our entry models. Now let's look into some real examples. This is a chart I have taken from December 17th. Now before I look into zones marked levels, it is very important we understand the structure. It is very important we understand the price behavior to understand the market structure. Well, let's try to find out what is happening with the price. Is the price struggling? Is the price expanding? So at this point, I can clearly see the price is trending lower. The price is continuously forming lower highs, lower lows, lower highs, lower lows. Top of the structure becomes our important lower high structure. Now we see a bullish intent. So this is just an intent, it is not a confirmation. So guys, think what you would do here. Would you go and buy here right away or would you wait for a retest? And if you would wait for a retest, what would be our validation points? If the market were to continue its downtrend, the market would have broken its 58,760 level. But that is not the case. Now it is very important for us to understand the speed of this intent. Now if you see here the yellow line I have marked from the top of our structure lower high to the bottom of the lower low, it consists of 104 bars. So that was a very slow move. Now if you look at this bullish intent, it covered this move in just 9 bars. So this shows speed, this shows the intent. But guys, it is just an intent, it is not a confirmation. As I have repeated multiple times, the first move is not our opportunity, but the retest is. So we have discussed this before. When we see this kind of move, we identify the origin of displacement, which is at the bottom before the price expands. We go and mark our demand zone using our last opposing candle. Alright, so now we see that the price has respected our structural lower high and did not break above it. And also one thing to pay attention here, while this was happening, market did not continue downward to make a new lower low. So this should tell us that behavior is changing, but it is not confirmed yet. Now on December 22nd, price have opened traded above our lower high, which is a clear break of structure. Now there is this flip of our support and resistance. Earlier what used to be resistance is now acting as a support. We see acceptance at the higher level above the break of structure because market has continuously printed candles on top of our previous lower high. Think how retail traders would have entered here. Sellers who were shorting at lower high, their stop loss would have triggered, and retail traders who trade at breakout of resistance would have entered there. Now let's see how the market plays out. So now we see buyers are now trapped. The sellers who flip their bias are now trapped. Okay, and now market is visiting our demand zone. Remember how I told you, if the intent is really bullish, the market will definitely respect our levels. So let's go into replay mode and see how it played out. Now here we are in the replay mode and I see that the market is retesting our demand zone. Let me zoom into this chart and then we will discuss about how we will execute from here. Remember, if the intent was really bullish, market will always respect our zone, but let's see how it ended up doing. So this first bullish candle is not our entry. There are three ways we can execute from here. Aggressive entry is buying on the close of this bullish candle. This kind of aggressive approach gives you the best risk-reward ratio, but it is very risky. The second one is a balanced approach, which is my style of trading. What I would like to see is a small pullback into our first candle, and then I would buy at the close of this candle. And the last one would be a conservative approach, where we wait for market to break our lower high and then pull back for further entry. So let's see how the market moved from here. Alright, so now we have seen the market has given us a small pullback into our first bullish candle, which is around the 50% of our first candle, which is very healthy. Now I would enter at the closing of this candle and I would put my stop loss at the bottom of this candle, or for safer execution, you can also use this swing low as your stop loss. So let's see how the market moved from here. Candles and a rally. Okay, that's great. All right, so let's pause here. So this is the beauty of patience and waiting for a retest. Now let's talk about invalidation. If the market breaks below my demand zone, I am not going to chase this trade. I know that the structure is now against me and this trade is invalid. So when you put all this together, the model is simple. Structure gives direction, impulses show you strength, imbalance show inefficiency, which will always come back to retest, to rebalance. Origin gives location, and pullback or retest gives us the entry. Miss one and your quality drops. This is the missing piece. This is the philosophy here at Chartistics. We don't predict, we don't observe, we don't chase. We just position at the right time at retest or at pullback. If this video helped you see the market differently, please subscribe. We are just starting up. I will be bringing up new videos which will help us understand the mechanics behind the real moves. Trade with patience, master your edge, and I will see you in the next one.